Yeah, it's your boy Crypto Blood, and welcome to another episode of my two Satoshis. It is May 22nd, 2019. Shout out to my man, Mr. Bitcoin, for that song request for today. The topic, You Make Me Feel Brand New. Never heard this joint, but it sounds pretty hot to me. Sound like a New York cat. Not sure, you gotta let me know, Mr. Bitcoin. But thanks for that song request for today. What's good, people? Hope you guys are doing well today, and welcome to another episode. We're going to be talking about crypto exits today. What I mean by that is, a lot of these angel investors, these VCs, they've invested in a lot of these startups that you use, from Coinbase to Kraken. You got a lot of VC capital that's been invested in this game. I would say as early as 2014, 15. And maybe even earlier than that, but these are the events that an investor looks for, they dream for, they want to definitely get an exit, and that's what happened with Galaxy Digital. That's Mike Novogratz's VC. They were able to do a successful exit out of their investment with Block.one. That is the company behind EOS. So they were able to exit with a 66x return. So individuals who staked 100 grand came home with 6.6 million. Wow. So we're going to take a look at this article here. It is out of Bloomberg. And the second article out today is out of Trust Nodes, and it is about Vitalik Buterin, saying that all the research breakthroughs needed for Ethereum 2.0 have been figured out. All they have to do is implement it. And, I never doubted that they would have the solutions to scaling. But for me, it was always the implementation of it would be the hard part. But maybe I'm wrong. We're going to take a look at this article and see what Vitalik is talking about regarding Ethereum 2.0 implementation. And lastly, the quick pick of the day is Pizza Day, Bitcoin Pizza Day, May 22nd. We're going to take a look at what this guy spent $800 million on. He spent 100,000 Bitcoins on pizza 9 years ago. And every year I do cover this time period because it just illustrates, in my opinion, why you wouldn't want to spend Bitcoin on day-to-day things like coffee, pizza, clothes, or whatever. You don't want to do that because it's the type of asset that's going to become more and more scarce as time goes on, especially as more halvings come about. You're not going to want to spend your Bitcoin. You're going to want to hoard it and only liquidate for instances where you want to buy other assets and diversify. So we're going to take a look at that article out of CoinSpeaker here in a second. But first, let's take a check at that heat map. We're down 2.7% in Bitcoin today. Looks like a red day overall. Bitcoin Cash down 4%. Ethereum down almost 4%. EOS down 5.9%, and Litecoin down 4%. So yeah, we're not doing that well. I will say though, BNB has hit all-time highs. I think as of yesterday, it's at $31.50. That's one of my better performing coins at the moment. It's been resilient. It was strong all through the bear market. It wasn't losing as much value in Satoshis as many of the other altcoins in my portfolio. So I think that's a solid coin, and it has a huge demand behind it because of the platforms that they're implementing it into over there at Binance. But let's go ahead and take a quick peek at that Bitcoin Pizza article. It says the worst investment of all times, ? Bitcoin Pizza Guy could have had 800 million today. The Bitcoin Pizza Guy doesn't regret having spent 100,000 in the course of 9 years and is even proud of being among the first Bitcoin supporters. It says here there were 2 Papa John's pizzas, and it happened to be in 2010 when he purchased it. The hero of the event was Laszlo Hanietz, who is now more widely known as the Bitcoin Pizza Guy. And just recently, he has given his first televised interview since that moment. What better way to illustrate the fact that Bitcoin is not a currency as of yet? It's just too early in the game. I think as things start to kind of mellow out, as the price gets higher and higher, maybe 200,000, 300,000, 500,000 a coin, more liquidity, you're going to have more people to create a market price, a market efficiency price for Bitcoin. I think then at that point you could say, okay, I don't mind spending Bitcoin on XYZ, because I know the price of Bitcoin against other fiat currencies are going to stay pretty stable. But no time soon, people. I would not be spending my Bitcoin on anything other than stacking it in that wallet. So it looks like Huobi is celebrating Pizza Day. They say today traders have the opportunity to buy cryptocurrencies at discount rates on their exchange. The exchange is offering Bitcoins worth 1.5 million USD in the frameworks of 2 special trading promotions. It has announced its plans to sell 20% of the promotional coin supply to the luckiest customer at 50% off Bitcoin's market price. The rest of the promo supply will be offered in the second promo round at 12% of the market price. I don't know what the hell they're talking about, but if you are a Huobi user, check their site out. They have a promo going on for Bitcoin Pizza Day. So out of Bloomberg, guys, the first article we're going to review is about Peter Thiel and Digital Galaxy, Mike Novogratz, all those billionaire players. Their crypto startup pays out a 6,500% return, and the startup they are referring to is Block.one. So it says after raising $4 billion in a record token sale, Block.one gives some back to shareholders in a buyback program. It says billionaire money man Peter Thiel, Alan Howard, and Louis Bacon have seen plenty of big paydays, but probably none as unusual as this one. A buyback by Block.one, a cryptocurrency startup, will return as much as 6,500% to its early investors in less than 3 years. This is crazy. That translates into $6.6 million for every $100,000 stake. A stunning result anytime, but especially in a market that crashed in 2018. Very true. Block.one is very much the odd one in the crypto market, said Tom Shaughnessy, co-founder of Delphi Digital, a crypto research firm in New York. Block.one stands out because of the scope of its ambitions and size of its balance sheet. It raised about $4 billion in the biggest sale of digital tokens. The promise is to help produce key building blocks for a new secure version of the internet. The company plans to announce a social media product in June, but with few outward signs of progress since the sale of EOS tokens, which was made over the course of a year and wrapped up in June of 2018, investors and analysts have had an overriding question. What is 32-year-old Chief Executive Officer Brendan Blummer doing with the money? In a March 19th email to shareholders seen by Bloomberg, the company, which is registered in the Cayman Islands and operates mainly from Hong Kong, disclosed some of the answers. Its assets, including cash and investments, totaled $3 billion at the end of February. Most of the company's holdings, $2.2 billion, are in what the email called liquid fiat assets. The majority of that invested in U.S. government bonds. Interesting. The email said volatility had adversely impacted its cryptocurrency portfolio, halving it to about 500 million. The company held as many as 140,000 bitcoins, making it one of the largest holders of the original cryptocurrency. According to people familiar with the matter, in an email Tuesday, the company said those losses were more than fully recovered as of May 15th as Bitcoin rallied this year. The firm has so far made $174 million in venture capital investments, either directly or through its partnership funds, which include a tie-up with billionaire Mike Novogratz. All along, Block.one has said the money it raised for selling tokens would be funneled to developers building out its EOS platform, including a pledge to allocate $1 billion to venture capital firms investing in the network. I thought that the funds raised from the ICO was going to be used to crash Ethereum, and it was all a conspiracy. Oh, right. That's right. I forgot about that. A spokesman for Block.one said the company is using the revenue generated from selling tokens to expand its resources and build its businesses. This guy, Richard Burton of San Francisco-based Balance.io, a blockchain company that designs applications for open source financial products, said that Bitcoin was started on a shoestring and Ethereum raised just a few $1 million, which goes to show you don't need anything like the money Block.one raised to launch and scale a successful network. It should be beholden on them to explain why they need it that much and what they are doing with it. Okay, Richard, let me help you understand something. They didn't request $4 billion. The market gave them $4 billion. I don't understand why you don't understand that. You own a company. You should understand they didn't ask for $4 billion. It was an open ICO for a year and it raised $4 billion. Not anything of their doing. It was the market that dictated that. So you shouldn't be mad at Block.one. You should be questioning all of the people who participated in the ICO and gave money. The buyback of 10%, the article says, of its stock values the company at about $2.3 billion, up from about $40 million in valuation around 2017 with the seed round. The repurchase price of about $1,500 per share compared to $22 investors paid in the fundraising. An early backer, fintech investor Christian Angermeyer, doesn't intend to sell any shares. He says Block.one is one of the most promising and best positioned companies in the blockchain industry, and its success story is just beginning, he said in an email comment. In a statement Tuesday, Novogratz cited substantial outperformance by Block.one for the decision to sell most of his shares. His investment firm reported a 123% return and proceeds of $71 million in the transaction. He definitely needs it because he lost over $200 million last year. So he's probably trying to reallocate and rotate his portfolio and can recoup some of those losses from 2018. So I'll let you guys read the rest of this. It's just kind of more rhetoric about the whole buyback. Man, I mean, you can look at it a couple of ways. I mean, I think this is a positive move by the company to buy back shares. And that means that, in my opinion, they believe in what they're doing and they're giving a return to the investors that took that risk back in 2017. So the rich get richer, people. The rich get richer. And these individuals definitely made out pretty well here. I want to know what the announcement in June is going to be regarding EOS IO. It looks like it may be some type of social media platform. We shall see. Dan Lammer was talking about doing something like this about a year and a half ago. So they've been keeping it under wraps, and we're going to see what this platform is all about, or if it's even that platform that they're announcing. I'm not even sure, to be honest with you. Let me know your thoughts about this move by EOS and their buyback and a successful exit they position their early investors with. 6,500% return. That's great, man. That is definitely great. Second article is out of Trust Nodes, and it is about what Vitalik Buterin said recently, that all research breakthroughs needed for Ethereum 2.0 have been figured out. And it's all about implementation now, he says. So Vitalik Buterin, Ethereum's inventor, says that they have figured out all the research breakthroughs needed for Ethereum 2.0, with now just implementation left. We've actually already had all the research breakthroughs we need for a full implementation of ETH2. This has been the case for about a year now. The bold claim was made while there are now about 3 test nets for phase 0 of Ethereum 2.0, with a cross-client testnet being the next stage, which may begin this summer. I talked about this whole thing as well last week or so. The phase 0 is just staking a sort of dummy mainnet that's halfway between the testnet and the fully featured blockchain. Some features, storage, sharding, is to be added in phase 1, expected next year. The actual and full launch is then phase 2, expected in 2 years. So again, I have to explain to you guys, Ethereum 2.0 is about 2 years away. That is, if you guys want to hold on, you can. That's all good. I understand, you know, this is the first pioneer smart blockchain that really did it big, allowed a lot of ICOs and shit coins to raise millions of dollars. So I understand the attachment. But if you're willing to wait 2 years in this crypto game for it to compete with blockchain 3.0 projects that are out, like EOS that I've just talked about, Digibyte is doing a lot of scaling. There are so many Quantum. There are just so many blockchain 3.0 projects out there that are doing much more than what Ethereum is doing in capacity at the moment, and they're going to grow in the next 2 years. So I'm just letting you guys know. The full design is a somewhat complex system that we think connects different node groupings by individuals just running the nodes of the shards they're interested in. The shard is basically the current Ethereum network, but let's say with 1,000 nodes. Then we have a network B or shard B with its own 1,000 nodes, all running on the same base code and thus the same blockchain. there's hundreds of shards. Since these are basically different universes, getting them to talk is a breakthrough that goes beyond sharding to connecting private and public blockchain sidechains and all the rest. The way this works can be explained by Buterin first at a technical level, and then we'll give a far more simple read of it. He says the general process for a cross-shard transaction, for example, we'll use transferring 5 ETH is a shard A destroys 5 ETH, creating the receipt, a Merkle tree branch with a root committed into the state root of the block. Okay, look, I'm not going to read all of this technical jargon here. This is not relevant for most of you out there listening, but it is, I have to give it to them. It definitely is something that has never really been done before, and they're pushing the envelope of blockchain and computer science to the fullest, I'm telling you. But to me, it's just like they're trying to push Ethereum 1.0 into a circle when it's a peg square. And it's just, I don't think that, I'm still not convinced that the implementation, which is the most critical part, the implementation will be without hiccups. A longer roadmap than 2 years is basically what I'm saying. Can they do it? I think, of course, they would be able to, but 2 years, just knowing how software deving and rolling out and A/B testing and all that stuff goes, 2 years for what they're doing, I don't know, people. The article goes on to say getting to this stage was perhaps the hardest part, although some say coding is the hardest part. If you are running the nodes of different shards at the same time, moreover, it's kind of the same as increasing the block size. The difference here would be that you don't have to run different shards simultaneously, or you can have a full node for one shard and a light one for another. Here, however, is where you could get into endless arguments with a Bitcoiner who would probably argue that a full node is one that runs all shards and a few can afford to do so. And here's where ETH1X comes in, and that's a complicated design on its own with a premise behind the deletion of data by removing stale smart contracts and by outright pruning. The first might be easier than the second. The article goes on to talk about the race to scalability. A Bitcoin dev once commented that Ethereum is pursuing all the ideas that were rejected in Bitcoin Core. Whether that's a good thing or bad thing depends on your views and depends on how it is actually implemented, because Bitcoin Core did not quite pursue the ideas to reach a proper conclusion. Moreover, Bitcoin in its current state can't continue operating in a long enough time frame because although 1 megabyte every 10 minutes is not much, if we take it out, let's say 10 years, it all adds up. It does so slowly, and in some ways it's all fine right now. The current blockchain size, for example, is 220 gigabytes. In 10 years though, 520 gigabytes will be added to it. Considering Bitcoin is running at a bit above 1 megabyte, it would be a terabyte. 1 terabyte might be fine, but it doesn't reduce. It only increases. So eventually it goes to 10, maybe 100 terabytes, etc., etc. The Lightning Network might buy some time, and Ethereum has plasma, state channels, and all the rest, but they don't quite address the fundamental problem of an ever-growing history. Yeah, but we'll see what happens with this Ethereum 2.0 rollout. Again, it looks like we're about 2 years off according to their time frame. So that that's probably best case. You're probably going to put the best case scenario out there or close to it. I'm not too convinced, people. I know how this thing goes. I've seen it so many times before with software, especially when you're pioneering. Like, I give them credit. They're definitely pushing the envelope. There's no lie about that, but we'll just have to see what happens. But what these blockchains like Ethereum, I don't even look at Bitcoin as a smart contract platform. It's like comparing apples and oranges when you're talking about Ethereum and Bitcoin. Two different architectures which serves two different purposes. Bitcoin is kind of going to be considered a store of value, and Ethereum was supposed to be for smart contracts, but Ethereum lacks parallelism or multi-threading, and I think that's a big thing. I'm not sure with Ethereum 2.0 if they have their own version of that with all the sharding and all of that. Not too sure. Have to dig a little bit deeper to see, but we'll have to see what happens, people. What do you guys think? Do you think Ethereum 2.0 will be out in 2 years? That is what they're saying. Give me your thoughts about that in the comments below. And I would have to say that's pretty much it for today. Ain't got no more for you. Shout out to my man Mr. Bitcoin for the song request. The topic, you make me feel brand new. Crypto makes me feel brand new every day. It's your boy Crypto Blood. Make sure you like, share, and subscribe. Click that bell to support this channel. And I'm out of here, people. Holla.